Mhm.
Action.
Yeah. What is up, everybody? Welcome back to the Russell Journal. My name is Russell, and this is my journal entry for Monday, January 23rd, 2022. Not a lot of market data came out today, some earnings, this, that, and the other thing. You can see from the market behind me, we were up, pulled back a little bit, and then we're back up again. Kind of headed in that northern direction. Will this be a breakout into a brand new bull market or not? Overall, really, who cares? Honestly, just follow the direction of the chart. Who knows? At this point, it's asinine. I think logic dictates that asset prices shouldn't go up, but the chart says "fuck you," we don't care. So that's where it is. I don't really know what to call today's show. Again, not a lot of data coming out. We got PCE stuff coming on Friday, unemployment numbers on Thursday, and some earnings going through the week. You got Microsoft coming up on Wednesday. They're laying people off, which is a little odd. I got a brother who works over there. I was talking to him, and his department's safe, but they're just not. They're not entirely. Things aren't terrible, but things aren't super great either. So where do we go? Okay, open up this morning. Catch this. We open up this morning down there at 395. I'll pull the chart back and we'll look at that later and stuff like that. I want to just jump right into my trades for the day. Okay, came in here and you got this big push up. Okay. My big problem with this big push up, and I did not trade this. I thought about it a lot of times. I really thought, I was thinking really long and hard about looking at it. And it kind of took me back to yesterday's show and to Friday's show where I said, you're thinking about the trade. It's not there. You don't have that setup there. So we did get the pullback here and you started basing in here. And I went long at the 40 with the 404s calls into this little bit of basing right here. As we began to get up here and reject, I began to see the candles start to wick selling power, pressure, and things of that nature. And so I did actually dump into the very top candle, my 402s. And here's one of the key things that you can watch if you're an options trader. Watch your premiums. If you start moving up and into sort of some type of breakout fashion, and those premiums aren't moving up at all, they're staying stagnant or around where you bought them, chances are the fix is in. So I did dump them into this here. I got a little nervous, and so I did dump them into that there, which is in a lot of ways, it was good because I pulled out like $20 right there and was okay. More or less, I would consider that like a stop out. I stopped out for a $20 gain with the trailing stop loss. Because again, it did start to reject back in here, and I was just I was like, okay, though that's not, this is a long shot anyway, right? When we got the break below the 18 on the 1 minute, I waited until it went over the 2 minute. I got the short, and I rode the short from like the break in here all the way down into this first little dip. Pulled about $60 out of that bad baby right there. Was another really, really great, $40 out of that move right there. So it was a really good win as far as that was concerned. I felt as though there was a lot of stamina left, and you can see here one of the last things that I have. You can see that I didn't actually close these calls. I actually lost all my premium on them. I came in here. I was looking to hold support at 400. I wanted to be able to see if it would break support and then get back over. Unfortunately, and this is where like I broke one of my rules, which is I don't trade power hour or going into power hour. And that's because going into power hour, you're at the $400 level, you pull back underneath it, and then you go back to reclaim it through power hour. Okay, the $400 level. Okay. The problem is here is I had to buy this basically at this point because right here, from here to here, where this started is power hour basically started moving this market up. Okay. Now, had this been any other time of the day between 7 and 11 o'clock in the morning, noon is power hour out here on the West Coast. But 3 o'clock, 2 o'clock, 3 o'clock is Eastern Standard Time. So noon is power hour from 3 to 4 on the East Coast and stuff like that. So what I did here is I really, again, it was kind of a long shot for me. I genuinely thought, this whole thing has been a short squeeze operation. It's the second time that, it was a conviction play. This was not my setup. I kind of ignored a lot of my setup. Again, you can see, even if my move, which I use the slow stochastic out of oversold into the move up, that would be normally my setup. Instead, I bought in here, which still had, you'd come out of oversold. I was looking for the rebound up there. Did not happen. Here's where I typically should have cut it. But again, I really thought that this was going to go back and retest the high of the day up there, retest the highs. We did not make it. We made it all the way back. I was almost right. So I did the right thing at the wrong time, I would say. That was basically it. And, there's those of you out there say wrong is wrong. Again, total loss for the day is about $60. And it was all basically, that whole thing there was basically, so I'm flat, more or less flat on the day, I guess is the way to say that. So it was a risk-free trade as far as I was concerned. We almost made it. I don't know that I will take a trade like this ever again. I don't think I will. Again, it's just not worth it into power hour. The other thing I found, again, I've tracked some of these. A lot of them are trades I haven't taken. Okay. And what I find is about 1 in 10 gives you the move that you want, and that 9 of them don't actually ever work out. Okay. So one of the things I think for me is going forward is that I don't want to be in the habit of going after the 1 in 10. I want to go after the 9 in 10. So the things that happen 9 out of 10 times, not the things that happen 1 out of 10 times. So I did test that. Again, it was all free money. My account's basically flat for the day. So I'm not really upset about it at all. Really fine with what's going on there. And so that's kind of how I feel. Going into tomorrow, again, as we go through the week, I don't know how volatile this market's going to continue to be. You've got earnings this week. You've got Microsoft on Wednesday. You got Apple coming up next Tuesday. Apple's next week. Microsoft's this week. You got stock corporate buybacks are supposedly starting on the 27th, or at least the window ends. I don't know how strong those are going to be either. I'm very interested to see what the price action is really going to be. I'm not really making any estimates on it. From what Steve Van Meter says, there's like a 1% tax now on stock buybacks. So maybe they won't go into buying stock back. Maybe they will go into making other equity purchases like land and factories, and definitely not staff. It's not going to be employees, but they could be, companies with decent earnings could be using their money to get assets, I guess. I don't know. Again, that's all just water cooler chit chat. So again, FOMC next week, PCE inflation numbers this week. I don't expect this. I expect this to sort of drift. Well, we'll see. Hold on. Let's go look, because let's go over here and take a peek, because I think there's a couple of things that could happen that would be very interesting. If you go to the daily, again, you can see those 402s. I almost had that son of a bitch. Any other time of the day, if that had been, 2 hours earlier, I'd have made probably $200, $300 on that trade. But at the end of the day, that theta really is your enemy. So I'm not too worried about it. It was a bit of a lottery ticket. Those 10 contracts were pretty cheap. So I think I paid like 8 cents or something for them. So it was not a lot of money. Okay, I'm trying to get this large enough I can see it on the chart. Why are you being like this? Okay, so I guess the things that I would think about this, looking at it. Okay, So you're up here. You reached that upper Bollinger Band. You pulled back from it. You sold off. But you're not, profit taking for sure. But, you've got to push all the way to critical resistance there at the $400 level. You did close above that $400 level. So I'm assuming, I'll be Corey at the Stocks channel. If you're shorting this market, this is a pretty safe place to do it. Any candle closes above that level, that line, that 400, between 400 and 401, you're probably going to risk off your puts because you're wrong. But it is risk to reward ratio here is not for shorting is not too terrible. It's worked basically all over here, and it worked back over there and a couple other places on the chart. And so what else do I want to say? What I would say is that keeping the market sort of pinned between here and here, if the options traders, if the options sellers, if the dealers have any level of money or value or whatever, they might try and pin it against this and sell puts and calls against it all the way into FOMC. Could see a pullback. I mean, you already came back to this 18-day moving average. You hit that and bounced off of it pretty strongly. But that doesn't mean it can't come back here or even come back to the 200 there. What's that, 394? Hold on one second. I don't even know why I'm bothering to do this. It's not like it matters anymore. So maybe we'll talk about that in a second. Let me look. 18-day moving average is sitting in and around 388. I don't think you're coming back to that. 200, 392. Not a bad spot. If they're going to build this whole thing into like a breakout sort of wedge, 392 pullback there. Okay, so a little bit of the stuff I want to go over, I guess I should address with the TA. Okay, talking about the TA. Okay, so one of the things that's been brought to my attention is that we spend a lot of time predicting the market, okay? And really where you're at with it is that's wrong, okay? And I'm starting to embrace this more and more. And this is, again, something that, again, this guy, Nick, I was dealing with, talked about was the idea that you're really just reacting to the market. You're not trying to predict it, right? And which is where this trade really screwed me, right? Is because I didn't really react to the market. I predicted that we would go back to 402 and that and we didn't make it, right? So I wasn't really reacting to the market there. I was predicting, and that's what happens when you predict is you lose all the money you made in a single day. Again, I'm not that upset about it. Will be if I repeat that mistake again, I'll be pissed. I'll throw a fit for you. But again, this is a prediction, and it didn't work, and that is what happens. And 9 out of 10 times it doesn't work, right? So, all right. That all being said, okay. So what's really being said here is that what I'm trying to get at, the point that I'm trying to do is you don't want to predict the market. And this becomes very, very difficult because options are a lot about sort of predicting the market. It is when you looking to buy options, do you think the market is going to go up or do you think the market is going to go down? That is sort of the wrong way to do it. What you have to sort of do is the market going up or is the market going down at that exact moment? And then try and position yourself accordingly with that. And maybe that's where I got into some of the stuff with my setup being wrong a little bit. And again, a lot of this is like there is stuff where I have sort of these ideas and these things about how the market works. But I think I need to tweak them more for trading single leg, zero DTE options. So that's kind of where I am with that. But again, really want to focus on this idea of like, We don't want to predict the market. Like yesterday I came out, I talked a little bit about ABC patterns and how there's one on the chart. And we're kind of paying attention because everybody out there and their dog sees the ABC pattern. And again, you can go back over here where we had this, I don't have it pulled up very well so you can see it, but you have this big old bear flag down here and it does nothing. As a matter of fact, it breaks to the upside, goes against what everybody wants it to do. At the same time, you got the ABC pattern. Will it play out? Well, to be honest with you, in order for it to play out, you got to break above these highs over here, just for that to even engage, right? You have to go from the bottom to the top. That's leg A. You got your 50% leg. Now for this whole thing to be actually validated, you actually, from what I understand, and correct me if I'm wrong, please in the comment section, correct me if I'm wrong, but I believe you have to break above the peak of the A leg in order for you to get a valid ABC pattern set up there. So you do have the A, you do have the B. It's a 50% retracement. So you're looking for 100% move back in the other direction. But in order to get that, I believe you have to invalidate this peak over here. So we haven't done that yet. And that would be an example of reacting to that pattern, right? It's like, okay, so here's my plan. I think I see an ABC pattern. If we break above the 410, right, this previous high right over here at the 410, if we break above that, I will go long. I will set my risk right here at that same level, and that will be my risk. And we will, and I will have a price target of the full 100% move on the C leg. Okay, that would be how you react to that. You're like, if it does break that, boom, right? You might want to pair that with, it needs to have momentum with it. You might need to pair it with, it needs to have, the MACD. I had this one up today. I don't normally have it going, but the move was pretty wonky. And so I kind of wanted to see where momentum and price were sort of moving together. And again, the MACDs were actually spotted. The short I had today, the good short I had was from the MACD. So, a little bit, you can see some of the traps and tricks with the MACD if you think it's going to get a little trappy, or if you want to see if the bears are getting ready to take over. You can usually spot that with the MACD signal. Anyway, I'm not going to teach MACD. You can. There's plenty of stuff out there. Go watch MACD. Just look it up on YouTube. Anyway, so that's kind of all that's being said. Again, flat day for me, maybe slightly red, not really that bad. I might have lost $20 probably, to the downside. So, again, not that upset about it. Again, I think the big lessons are, one, I need to adjust my option strategy a little bit, to where I can take this second move, right? Like I caught the second half of this whole candle here, which was great on Friday, and this follow through candle was there. I should have been looking for a follow through or had a setup in a follow through. Again, I trade 0-day expiration contracts. So I need to figure out what the follow through move is for that, to catch the rest of that connection, right? That I would say is probably the real takeaway from today. Again, I did try and catch the rebound. That was prediction. That was wrong. Don't do that again. No predicting. Okay. Just wait for the signal. If you don't get the signal before noon, you're out. See you later. Okay. Anyway, that all being said, that's pretty much all I have for you today. Just a quick review of my trades. I'll do better next time, coach. In the meantime, the Russell Journal, written, edited, hosted by me, Russell Liss. We're produced by Social Media Shows. Executive producer is Maria Pereza. And until tomorrow, just pretend I said some sort of catchphrase.